Welcome, dear traders. It's me, Tthe, and you are watching a recap of the Asian session. Stock indexes kicked off Monday with a mixed dynamic. Japanese shares were rather volatile. They added gains and then lost them again. At the same time, Australian stocks reached 2-month highs. The Chinese stock market rose as well, fueling an increase in New Zealand equities, so they managed to snap their losing streak. Let's discuss the reasons for such mixed movements as well as the sentiment in the stock and forex markets. Investors in the Asia-Pacific region continue to assess the impact of inflation, interest rate hikes, and the risk of a global recession. They are analyzing all the factors, taking into account the peculiarities of the national economy and politics. For example, Japan has been stubbornly committed to an all-to-lose stance for the last 10 years. The new Bank of Japan governor has also stated that he will not change the current monetary policy settings. Moreover, the new Bank of Japan leadership is trying not to give any hints about the timing of a policy reversal. In many countries, inflation is very high or not slowing enough. The important thing is that the situation is quite different in Japan, Ueda told reporters after his appointment. Indeed, inflation in Japan is very low, standing at about 3%. It's gradually declining to the target of 2%. Other countries cannot boast of such success. Ueda's remarks left the scope for changes for the yield curve control policy, and he said that Bank of Japan policymakers would discuss all options at each of the meetings. Although Kazuo Ueda hinted at some changes, nobody knows when exactly to expect them. Besides, the Bank of Japan is likely to be rather cautious when making decisions given the risks of the global recession. Nevertheless, the new governor admitted that sooner or later the regulator would adjust its monetary policy stance. The dovish stance of the Bank of Japan and the growing expectations of another rate hike by the Fed at the May meeting helped the US currency recover against the yen today. Besides, US Treasury note yields jumped after the release of the US data on Friday. They maintained bullish momentum on Monday, and the dollar-yen pair began to grow on Friday. On a Monday morning, it consolidated in the bullish channel of 133.70 and 134.20. It jumped today to its 2-month high of 134.20. However, shortly after the yen was able to regain momentum, the pair retreated to 133.90. Its further trajectory will depend on the movements of the US government bonds, fresh US macro stats, and the new statements of policymakers. What's more, risk aversion usually spurs demand for the safe haven yen. For this reason, investors are looking forward to a new batch of the US economic data as well as the earnings reports for the first quarter of 2023. At the end of last week, top US banks revealed their profit results. They showed that the US economy remains resilient despite aggressive monetary tightening. It increases the chance of a rate hike in May, and last Friday, another Fed policymaker once again stressed that inflation remains too high. So the regulator needs to stick to monetary tightening. And Fed Governor Christopher Waller also warned that even after the end of the tightening cycle, key rates could remain high for a longer period of time than expected. Naturally, traders took notice of those statements. However, there are still speculators who are betting on a shift to a softer stance as inflation is cooling down. High interest rates could help the Fed curb inflation, but only by hurting the economic and increasing the risk of a recession. For the US dollar, this is a rather bearish scenario. Besides, it has already significantly declined since the start of 2023. Since the second half of 2022, the greenback has been trading at 114. Therefore, its jump to 101.80 on Monday morning does not look so impressive, although the US dollar started the new week with a moderate growth to 101.70, and it was rather volatile and did not move far from its annual low. The US dollar is losing momentum due to foreign inflation and the stabilization of the banking sector. In the Asian session, the US dollar index was moving with sharp fluctuations in the narrow range of 101.50 and 101.80. The Australian dollar also traded without a clear-cut trend. It was moving in a wide range of 0.6690 and 0.6721. It even managed to test a high of 0.6717. In the morning, its rise was bolstered by positive data on the new home prices from China and another liquidity injection into the banking system by the Chinese government. Tomorrow, China will reveal its GDP figures for the first quarter. The Reserve Bank of Australia will publish its meeting minutes. Traders prefer sitting on the sidelines ahead of the release of the minutes, so trading was rather lackadaisical. It adversely affected the bullish momentum of the Aussie. Oil prices are also down. After a 4-day rally last week, the Aussie rolled back. In the Asian session, the AUD USD pair took a nosedive to 0.67, and the New Zealand dollar also showed a mixed dynamic. Inflation in the country surged to 12.1% in annual terms, and this is the highest level since September 1989. The central bank is facing a tough challenge. It has already raised the rates to a record high, but inflation has not slowed down, so the risk of a recession in the country are mounting. The prospects of the Kiwi look grim, and bears took control of the Kiwi dollar, pushing it down to 0.6195. The Kiwi was moving in the price corridor of 0.6185 and 0.6215. It's unlikely to escape the bearish channel. Meanwhile, futures for stock indexes are trading higher in the Asian and European sessions. The earnings season is in a full swing. Traders are mainly interested in reports from financial corporations such as the Goldman Sachs and Morgan Stanley. Netflix, Tesla and Johnson & Johnson will reveal their profit results. Investors are also anticipating China's GDP data for the first quarter, which is on tap on Tuesday. And that's all for now. Subscribe to our channel and get only the relevant market news. We wish you profitable trades and good start of the week, and see you soon.